What if you could track a whole nation's industrial ambition just by looking at one company? Well, that's pretty much the story of Jyoti CNC Automation. Their latest earnings call, it wasn't just a bunch of numbers. It was more like a blueprint for where India's entire manufacturing future is headed. So let's break down what's really driving this company.
But first, to really get what they're doing, you have to understand the core of their business. They make something called a mother machine. It sounds pretty important, right? So what exactly is one?
Okay, think of it like this. To build a car, you need robots on an assembly line. But to build those robots, you need even more precise machines. Those are the mother machines. They are literally the tools that build all the other tools. It puts Jyoti CNC right at the very beginning of the entire manufacturing food chain. So here's our game plan. We'll start with the huge opportunity in India's manufacturing sector. Then we'll dive into Jyoti's specific strategy to grab a piece of that pie. After that, we'll check out the financials to see if it's actually working, listen in on some tough questions from analysts, and finally, take a peek at what they're planning for the future. All right, first up, the big picture. Jyoti CNC isn't just growing in a vacuum. Nope. They are riding this incredible wave of industrialization that is just sweeping across India. And just how big is this wave? We're talking about a market for these mother machines in India that's worth a staggering $3.5 billion every single year. The demand is already massive, and it's only getting bigger. But here's the kicker. This is both the problem and the massive opportunity. Right now, 60% of that huge demand is being met by machines imported from other countries. That giant gap, that is exactly what Jyoti is trying to fill. And this quote from their chairman just says it all, doesn't it? For them, it's not just about business. It's about a national mission. It's about self-reliance. The whole idea is to stop buying from abroad and start building world-class machines right here at home. So the big question is, how are they going to do it? Let's get into their growth blueprint. It's a really clear three-part strategy. They're basically attacking this on three fronts. First, people. They're investing in brainpower, bringing on over 1,000 engineers and even starting their own training school to keep that talent coming. Second, production. They're going all in, massively boosting how many machines they can build. And third, they're not just thinking about India, they're looking abroad, especially to Europe, to meet growing global demand. And when I say massively, I mean it. Just look at these numbers. They're aiming to go from making 6,000 machines a year to 16,000 by late 2026. That's almost tripling their output in just a couple of years. It's incredibly ambitious. Okay, a great plan on paper is one thing, but is it actually paying off? Let's turn to the financial scorecard and see if all this strategy is hitting the bottom line. This revenue chart tells a really interesting story. Look at that biggest slice of the pie. Aerospace and defense, making up 36% of their revenue. This shows you they're not just playing in the regular manufacturing space. They're major players in some seriously high-tech industries. And their future looks even more locked into that strategy. Their order book, which is just huge at over 4,500 crores, shows that aerospace and defense is set to grow to 40% of their business. That's a huge vote of confidence from these really crucial sectors. So what about the bottom line? Well, the numbers are backing up the story. We're seeing solid, double-digit growth across the board. Revenue's up almost 18%, and profits are right there with it, growing strong. The strategy seems to be delivering. Of course, any time a company has plans this big, it's going to get some tough questions. And during the earnings call, the financial analysts definitely didn't hold back. So let's get into some of those details. The biggest question was pretty straightforward. You've got this giant list of orders and a huge expansion plan. But can you actually pull it off? What's going to get in the way? And here's the reality check. The challenge is real. Their current factories are already running at 88% capacity, which is super high. That could create a real bottleneck before the new plant is up and running. So what's their answer? Well, they're basically squeezing every last drop of efficiency out of their current setup, optimizing everything they can to bridge that gap. All right, so for the final piece of the puzzle, let's look past the current expansion. Because Jyoti CNC isn't just planning to build more machines, they're planning to build smarter ones. So what's coming next? Three really cool things. First, they're building their own operating system, the Huma controller. Think of it like their own version of Windows or iOS, but for giant industrial machines. That alone could seriously boost their profits. Second,
They're going after the holy grail, semiconductors. They're developing the ultra-precise machines needed to make computer chips. And third, they're doubling down on what they already do well, making critical parts themselves, which gives them total control over quality and costs.
And that really brings us to the ultimate question here. With a super clear strategy, a massive market right in their backyard, and a serious focus on the next wave of technology, can Jyoti CNC go from being a big deal in India to a true world leader? The blueprint is there. Now it's all about execution.